Meine Damen und Herren, herzlich willkommen auf der EXPO Real am Tag 2 der Messe, hier im Fernsehstudio von Immobilienmanager Verlag und ZIA Zentraler Immobilien Ausschuss. Heute bei mir zu Gast ist Philipp Charls. Philipp Charls ist der CEO von EPRA, der Europäischen Vereinigung der börsennotierten Immobiliengesellschaften. Welcome, Mr. Charles.
Thank you for having me.
The German sector of listed companies is quite small compared to other countries. What are the reasons?
I think Germany has been a very latecomer into the equity investment market. I think at this point in time only 3% of Germans own equity, which is very low if you compare to other European countries. Now this sort of conservative approach has been, I think, a perfect breeding ground for the development of the German open-ended funds. Over the last 50 years, these funds have been very successfully developed and very successfully sold by the banks. If you look at the product, it has been sold as a bank savings deposit product for property purposes. But I think what you now see in reality at this point in time is that it is not a bank and a savings product, and there is a definite mismatch with regard to the liquidity because of the underlying assets that are difficult to solve. And that, I think, is the reason for the specific situation the German market is in at this point in time.
And EPRA analyzes, forecasts high growth potential for the German real estate sector listed. In which fields can it grow?
Well, we think there is a huge potential for Germany. If you look at property investment assets available in Europe, Germany is by far the biggest market, over 1 trillion euros. If you look at the listed market, it's not even 1.5%, which is really, really small. We think that there is a huge opportunity of growth if we, EPRA, together with ZIA, are capable of explaining properly to the market what are the benefits of the listed market. And when I say benefits, I think about transparency, the liquidity, the excellent management that is hands-on involved in the management of the properties, and the great quality of the assets. And I think if we are able to, to communicate this message properly, I think it will be possible to grow the German market by factor 4, and thereby doubling the market in Europe in the next 4 or 5 years. And I think the German REIT legislation is a perfect starting point for this growth.
Yeah, we refer to the REIT legislation later. But before, the financial crisis has driven a lot of money into the real estate sector as a safe haven. Is the listed sector performing better or worse than direct investments or other vehicles?
I just talked about in your previous question about the liquidity and the transparency of the market. A consequence of that liquidity and transparency is also that the listed sector is closely linked, connected to what happens in the economy and to what happens in markets. And it's interesting to notice that investors in difficult markets like we're knowing now tend to go to low risk assets that have investments that have a stable sort of basis. And in that sense, it's very interesting to notice that the listed sector is traded every day and appraised every day by those markets and by analysts and by regulators that regulate those markets. And I think that is probably the reason why the listed sector has been able to do such a good job, because they are appraised daily by those institutions on the quality of their management and the quality of their assets. And I think that is behind the fact that this sector has been able to refinance itself at the depths of the market in 2009 in such a successful manner.
You just talked about the German REIT legislation. One point is that residential REITs are not allowed. Is it comprehensible to you?
I think it's not for me to judge cultures and local politics. I think that would be not appropriate. But having said that, I think it is a missed opportunity that residential is not included. It would have been great. It's a big sector, and it would have been great and a great opportunity to develop also the quality of the stock. And I think on top of that, it would have been really important for the institutional investors. Why? Because the listed sector, particularly REITs, are relatively low risk and have a fantastic stable income return over the years, and that's exactly what these investors need at this point in time. Think pension funds and institution companies, they want, you know, continuous dividends and payout, and that's what the listed sector, in particular REITs, do.
Yeah. And another issue that is discussed often in this context is the correlation of the listed real estate companies to the overall listed sector, like indices like DAX and so on, which makes it not available as a counterbalance, because it's correlated. It goes up when the DAX goes up, it goes down when the DAX goes down. Will this change in the near future?
I think, you know, it's like you asked in your previous question about the performance, and then I said it's the liquidity and the transparency that creates a closer connection to what happens in the market.
Yeah.
What we say and what we've seen in research that we've done, particularly with the Regensburg University, that yes, short term there might be a correlation with stock market, but if you look long term, then listed real estate is a perfect proxy for underlying real estate.
Mr. Charles, thank you very much.
My pleasure.
Have a nice fair.
Thank you.
And we meet again. Thank you.